shoulders formations have been a hot topic lately, and trading's a bit quiet, so I thought I'd do a little video on them. And people get very emotional about their head and shoulders formations, but what people forget is it's just a price reversal formation. Okay, that's all it is. Okay, so a head and shoulders formation will typically come at the end of a trend. Okay, it will typically come at the end of a trend for a reversal. Okay, and this is what it looks like, as most of you will know. Okay, that is a typical head and shoulders formation. But let's consider, what makes it valid. Okay, and when and where you shouldn't trade them. Okay, now often these will present as fake outs. Okay, which is what we've discussed. Let's say there's a 50-50 split, and what I'll talk about with that is, okay, let's take this area as an area of supply. So the first thing is you should never trade any kind of chart formation really outside of supply and demand. Okay, because you're asking for failure, especially if it's against trend. Okay, so let's say you've traded a demand rejection up from this point. Okay, if it's that short, a head and shoulders formation isn't valid because no trend has been established. Okay, a trend has to be established in order for a chart formation to be valid, a trend reversal formation to be valid, which is typically why we don't trade these on shorter time frames. However, on the 15, the minute, the 30, the hour, if you're looking for a retracement for a continuation of a trade, then obviously the validity becomes stronger. Okay, so you should trade these in supply and demand areas after trends. Okay, and we're talking about extended uptrends like this. Okay, something along them lines. Okay, and then the trend changes based on the chart reversal pattern. Okay, not anything that seems to sort of bounce around here, consolidate, and then throw up a formation. That's not a head and shoulders formation. Okay, it comes at the end of a trend. Okay, therefore, 1 hour, 4 hour, daily reversal points of continuous trades. For instance, there's been a long-term down trade, okay, and that is the trend, and then up comes the mini trend and presents a formation to get on a continuation. That's a valid head and shoulders. Okay, a long-term price swing where price comes up to meet a supply point and then the trend reverses in a supply area, that's a head and shoulders formation. Okay, not within consolidation. Okay, and the reason these work so well is because people lose money on them. Okay, and what I mean by that is because they often fake out at the top, the fake out at your supply zone. Okay, you've got to think about the valid areas of trading. When you're considering flash, and let's say there's 30% of the time a head and shoulders peak above supply and demand. Okay, so now the first thing to remember is if you trade the swing, okay, you don't know that price is going to come down, so that is a no trade zone for us. Generally, that is a no trade zone. Okay, now what happens when it peaks? On the occasions where it does peak above the supply, it becomes demand. Okay, so we look for buys in this area. Okay, we look for buys. We look for continuation trades based on the breakout. Yeah, obviously that doesn't work. We may lose money on that, but we've got to have it in us to look at the buyer switch. Okay, if there's been a rejection here, there's very likely to be a further rejection here. Therefore, we have a valid buying point based on price action, based on being a valid head and shoulders formation in a supply area. So that is always an area that you should be able to look for. Okay, and then we have the neckline. Okay, this is the neckline, the bottom, the base of support. Okay, the second valid opportunity will be the retest of that neckline. They're the two places we will allow ourselves to trade this. Yeah. Anywhere else, really, there's no point. Okay, so what you'll see sometimes is price move like this. Okay, head and shoulders. What will happen now is price might dip down slightly. Now, the reason, I don't like this setup for the retest is because there's no symmetry. Okay, a head and shoulders formation is all about symmetry. So I would suggest to wait in for that shoulder. Okay, if you can see it's a likely opportunity this retest isn't going to work a lot of the time, because how many chart patterns do you see that look like that? You don't really. You often get that shoulder, and it sets up so often because people know how charts move. Okay, so if people are short, which clearly they must be because price is going down, they're going to profit take at the base of support, because at the end of the day, all it is a short-term price reversal area. It's the base of support. So people take profit. People see the shoulder come in potentially and buy it back up and take their profit at the supply. So it becomes a very logical place to enter. Okay, and for this to be really valid, what is missing? The trend line. Okay, the trend line will often dictate the trend change. So if it looks like this, okay, a double top isn't the likely option, because your base of supply that you've noticed over time is your price reversal area is still here. You're saying the head is an anomaly. Trades will be likely in this area, because over the course of time, price has rejected this point as supply. So that's a likely trade option. Okay, shift the supply point and it all changes. The double top becomes more necessary, more obvious, if you were to shift, let's say, this up here, like this. Okay, if your head fails in the supply point, okay, then you're not only looking at a head and shoulders formation, but you're also looking at a double top, because the supply point's up here. Now, that doesn't mean a head and shoulders formation isn't going to happen. All it means is the neckline is the more likely trading opportunity. It also doesn't mean you can't trade, in the shoulder. It just means you've got to be a lot more careful about it. Okay? At the end of the day, what you've got to consider these formations as being is not a price reversal pattern, but just a shift in momentum, because that's all it is. Okay, let's take two similar trends. There's an uptrend, there's a downtrend. Okay, on their own, they're just uptrends and downtrends. That's all they are. Okay, so you trade them as such. Put them together, and they become the head and shoulders formation. Take them apart, they're just normal trends. Put them together, they become a head and shoulders formation. Okay, so if you understand how staircasing goes on, we can understand the levels at which we're going to be interested in trading. Okay, and it becomes obvious of why head and shoulders formations work so well, especially in supply and demand areas. Okay, because this is your first retracement trade. Where it doesn't matter where the head is. Okay, there's always going to be a first retracement trade after the trend break. Yeah. Now it may double top. It's up to you to decipher whether that's worth the risk. Okay, but a lot of the times, head and shoulders will form in supply areas purely because that move down indicates that the trend is potentially changing. This supply break indicates that the trend is potentially changing. Therefore, your supply point becomes the shoulder, because it's the first retracement. Yeah, it's a shift in momentum down and that first bounce up. Okay, on trend, you're getting higher lows. Okay, as soon as this trend breaks and it comes and hits this area, it's not a higher low. Okay, it's a low. The momentum is shifting. Therefore, the resistance point above becomes an opportunity, and then the trend can be confirmed as being completely changed, if you wish, from that point. If you deem it necessary, and your supply point is either here or here, then you can consider that trend change. And it doesn't mean it's going to win, but it means it's got a high likelihood of doing so. Okay, and that allows you to take that staircasing mentality and trade the different levels down, because all it is two separate trends that come together at some point. Okay, so what have we learned? Okay, we should only trade them in valid areas. Okay, they are separate trends, put them together and they become a formation. Okay, nothing is confirmed until it happens. You shouldn't trade the first shoulder because one, you don't know it's a head and shoulders. Two, you're essentially picking a supply point or a swing point, okay, which is bad even if it is on trend. Okay, there needs to be some kind of breakdown. So you take a mini head and shoulders, put it in somewhere, okay, on a shorter time frame, and maybe that becomes valid because it's a chart reversal pattern. Head and shoulders, double top, bearish wedge, whatever you want it to be, whatever gives you the confirmation to trade areas. Now, I'd suggest the first hit of supply isn't going to be the best opportunity, okay, because you don't know whether that's going to fake out to the top before coming back down again. Yeah, so this kind of formation is likely going to thrive on people getting in early, when actually what you should be looking at is the shift. Yeah, so you should look at them on trend only, for instance. Okay, so therefore, if price is in a long downtrend, you're looking at a retracement up. Is there going to be a formation in the area where you want to get in? If there is, absolutely consider the trend change. Okay, it's not rocket science. It's just shifts in momentum. It's just staircasing. That's all it is. Okay, and you don't get emotional about that. Yeah. Another important point is if you're trading in consolidation, just because it throws up a head and shoulders doesn't mean it's a valid head. Okay. Respected areas to enter these formations from our point of view is going to be the shoulder if appropriate given the supply level, or the neckline, which is the more traditional entry point for a head and shoulders formation. And you'd expect one of these formations to travel twice the distance of the formation from head to neck. So take that move, okay, which in this case is 100, so in this case is 90 pips. Okay, you'd expect price to go a further 90 pips. So you could look at the nearest supply and demand area at around 90 pips. Okay, and you're not going to be far wrong. Okay, so that's just a little bit of further, talk about head and shoulders formations because they're always interesting and they do appear everywhere. However, they often appear after you've seen them. Okay, so if you see something like this setting up in a supply area, now that may be a valid buy depending on the level, but if it doesn't and it does that, you've got a good idea what's likely to happen. Symmetry pays dividends. You wait for it. Thanks.